Welcome back. Let's invite Deven Choksey on the show now. Deven, good morning. We've had so many earnings to react to, parse through, whether it's MGL, SBI Cards, Bajaj Auto, BHEL, Suzlon. Tell us, which one is the pick of the earnings season from at least what we heard in the last 12 hours?
Yeah, good morning, Dimas. Well, I think the Bajaj Auto numbers, as you mentioned, I think they are largely in line with expectations. Particularly, I think the growth is on a higher side. More importantly, I think the larger part of the undertone of the management commentary about exports growing at 20% rate of growth, EV business contributing to the overall profits now. And on the whole, I think the business segment, I think above 125cc is also showing higher promise for growth. So if one looks at, I think the future prospects going forward, I think each and every portfolio, be it flex fuel motorcycles, be it an electric vehicle segment, or for that matter, I think the higher amount of exports and the credit business which they have started, all put together, I think the growth looks, I think, quite promising for Bajaj Auto. In my viewpoint, I think this one company deserves to get further rated now, and probably I think one should see, I think, a consistently better performance, I think, from the commentary that we have heard from the company.
Got that. Deven, good morning. Just wanted your thoughts on CG Power, if you have a view. Numbers came yesterday, and you'll be hearing the management later after 9:30, but your thoughts, stocks again. It's one of those names which is corrected sharply from 800 levels, has come off about 30%.
Yeah, Prashant, good morning. I think, yes, on the face of it, I think I have studied the numbers, not gone into detail because of the want of time. But I think on the face of it, I think it remains a little bit disappointing set of numbers. Of course, I think we would like to make any comment at this point of time till the time we hear the management and come back again on the subject.
Okay, all right. Got that. So that is CG Power in focus in that sense. Let's just quickly take a look at a few other sort of areas as well, which have been kind of hit hard over the last couple of days and weeks now. And banking and financial services, there was, of course, CSB Bank, who we spoke with. But what's the view now, Deven? Anything looking particularly attractive? I was just looking at some of the valuations yesterday evening, and except ICICI Bank, Chola Finance, and Shriram Finance, all, I mean, I think a majority of the well-tracked financial names, both banks and NBFCs, are now below their 5, 10, 15-year, 20-year averages, 1 year forward, price to book multiples. Anything looks attractive? I guess they have been there or below for a while, but I think they're in focus again after what the RBI has done, and it's kind of raising questions whether we're at a turning point. Your thoughts, Deven?
Yeah, and I think the good part is, I think most of the banks and the NBFCs have been producing better results than before. So that is a good part. In spite of, I think, the challenging environment in which they are operating, still, I think the performance seems to be, I think, far better than what market was fearing about. Look at the consumer finance businesses, look at the housing finance businesses of the large NBFCs like Bajaj. Look at, I think, the growth coming in from the corporate banks, including likes of Kotak's. I believe that, I think, the business condition remains absolutely conducive for them to grow further in coming period, largely because the economy is growing. And we are seeing that retail consumption is also increasing, so the retail credit is also increasing. So from that perspective, I believe that the companies with a pure retail focus are going to be more steady in providing the growth momentum going forward as well. The key would be the de-rating of the stocks. As you rightly observed, I think some of these stocks have been traded at a valuation which is far more lower than the previous past. So from a perspective looking at de-rating, maybe I think the banking sector as a whole, once the rate cut reduction starts, in next 6 quarters or so, we should be seeing most of the bank stocks getting re-rated to the higher levels. So we remain distinctly positive, though selectively in some of the pockets. We add the portfolios, we stock into the portfolio as well.
Okay. Hi, Deven. Good morning. Good to see you in as always. Deven, what do you make of these plays? You know, Swiggy, Zomato, they have come off big time from the top. Swiggy, in fact, yesterday came below its IPO price as well. For those who said that they missed out, the stock ran away, it's giving you another opportunity. Is it an opportunity or would you stay away?
Hi, Nigel. Good morning. Well, I think view remains very clear. As a consumer, I think this particular opportunity remains absolutely formidable because I think you are getting maximum benefit out of the services that these companies are providing. A phenomenal consumer tech platforms that they have built actually. But when it comes to investments, definitely I think the valuations are not supporting the earnings of the company. Earnings of the company, in particular for Swiggy, I think they are yet to come out of losses. They may come out of losses in few quarters from now. That's what the company's commentary says. But in that situation too, I think the valuation-wise, everything is fully priced. Swiggy, Zomato put together, I think will have the market valuation of about 3 lakh crores. And on that, I think the profit for both the companies put together, when you put it together, I think there is not much of a thing to talk about on the profit side. So in my view, I think these assets are costing or they are trading expensive in the marketplace at this point of time. Unless I think the market gains some momentum and a fresh money comes for higher amount of risk, I don't think that I think these stocks will be once again getting back into the kind of momentum that we have seen in the past. So I would stay away till the time I think the correction is complete. Maybe time correction would be higher compared to the price correction in given situation.
Okay, all right. Got that. Stay away from them. Deven, I wanted to ask you about a couple of other names from the EMS pack. You have stocks like Keynes and all that have come off 35% in a matter of, I think, 12, 13 sessions. The EMS theme, it ran away, it went up, like a rocket, but it's come down in the similar manner. Your take on these stocks? Anything you like from the pack among all of these players?
So I think the growth point of view, I'm not doubting these companies, but the fact remains that I think even on that growth, the valuations are fully priced in at this point of time as well, despite of the correction in the market price. In my viewpoint, I think unless the risk appetite gets developed further, we are not likely to see the new fresh allocation of money coming into this particular space. Even though the companies would continue to produce better results as they promise, but I don't think that I think on a given valuation too, the immediate follow-up buying will take place. This is part of the price correction. I think some of these companies would enter into some long time time correction actually. Having seen the price correction in the rapid manner, I think the time correction would be at least significantly larger in some of these companies as I see it.
Okay, all right. Thanks a lot, Deven, for stopping by and helping us out with your take on all the stocks that we discussed.